This is David Patrick, Fitzstock Charts market video update for Wednesday, January 16, 2019. We're in a 9-day uptrend, and we're getting paid fat. We've nailed 3 bogeys this year. I don't like to use price targets because they limit our upside, and when people think, wow, we met the price target, I'm out. That's not how you trade, and that's why I try to shy away from price targets. We're calling them bogeys, but they're just short-term goals of our trades. And it's imperative that we ride uptrends until they hit our stops. Let's look at a few things here. 90% Club. We have 20 different contracts. January and February calls. Some of them are puts. Doubled this year. 4 of those are up over 200%. One of them is up over 300%. Now, I didn't think we were going to beat last year's performance, but right now we're on track to beat it. And it's all by using a simple methodology, rules of engagement. Here's some other returns on, I don't think I've updated these, FFI, VCRM, Twitter, Workday, Google, Texas Instruments. I do anticipate that we're going to see some more stocks in the 90% Club very, very, very soon. We go to the website and we click on that HCPC thing, historical chart pattern comparisons, and we look at subscriber access only. If we click on that, yesterday I posted a bullish and bearish one because we've been looking at some bearish ones. And there are times in history that we get below the death cross and we do a V bottom like we just did, and we keep going up. And if you're so stubborn that you fall in love with historical chart pattern comparison that does diverge, and you miss the whole way back up. And I don't want anybody to be stubborn. That's why I say it's imperative to stay long, because we have phenomenal entry levels with the spider. And then we added with TQQ yesterday. That's a phenomenal trade just yesterday on TQQQ. Was it yesterday or 2 days ago? I can't remember. That's huge. It's up 5% this week. 5% are just an ETF. Anyway, when we scroll and look at these, there's one on the bottom. Let's click on that. This is the historical chart pattern comparison 2008. And the green line is our 10 SMA. This just happens to be the 10 SMA on a weekly, the higher time frame. And you can see back in 2008, we failed here. Where this red line is right there. I don't know if yeah, there we go. You can see it. We failed. We couldn't get above it, right? Now, we're right at it again. In fact, we might have broken slightly above it intraday. I don't know where we're at right now. But this is important where we close the week. Because if we close the week, and let's say we give some of these games back and we close at 2,600, 20 some handles off the high, and then all of a sudden we get knocked out of trend next week, we're still on pace for many bearish historical chart pattern comparisons, which we've been preparing for. We prepared for this massive short squeeze that we saw, 2575, 2600, and pretty close to our bogey today of 2630. We saw that. We nailed it. We hit it out of the park. But now what? Now what? Well, we don't know. And that's why, I gave an example of you can't get too bearish, just like you can't get too bullish when the market's running away. In 1998, this weekly, we did recapture that 10-week simple moving average, and we just kept going higher. And let's look at the higher time frame. So here is the S&P with our fibs. We'll look at that in a moment. And here's our weekly. So let's magnify this so we can see what's going on here. And by the way, my audio, I believe, was good last week, midweek, and then I tried another new microphone on Saturday, and I didn't like it. To me, it was too much echoing. And so I'm back to the headset, which I thought was clearer, less echoing, and nothing's perfect. Just like, there's never a perfect trading methodology, but we have a pretty good one that bats over 750 since we launched. And this microphone, I believe, is pretty good. It's not perfect. But anywho, So yeah, there we are. We are above the green 10 SMA on the weekly. And so let's find out what that level is. 2601. So you want to see us close above that and keep going higher. Obviously, that's what everyone wants because most people are bullish. We were bearish. Let's scroll back because we do have some new subscribers. We always have a few new subscribers and I just want to make sure we're all on the same page. So let's scroll back and just real fast dissect a couple things here. Back in November of 2016, I posted I was going all in long. All in long. I staggered in and I add on price strength confirmation and I got to a point where I was leveraged long over 100%, with the triple longs, triple long ETFs. Why did I do that? Very simple. Our number one price pattern is a bull flag above a break of a downtrend line, which we did. We broke above that green 10 SMA. MACD was curling up. And then I started adding when we broke out the new highs and ended up paying huge, right? That's great. It's not about your last, what happened last year, 2 years ago. It's about your latest trade, and we're obviously having a great year. But quickly, why did I go to cash? Because not everyone follows exactly what I do, but I did post this. Why did I go to all cash? Well, the higher time frame which we're looking at is the weekly was in charge. And, although we broke an uptrend line there, I probably freed up some cash. When we broke the new highs right here on the S&P 500, new highs with the price, MACD was not at new highs. So that doesn't mean anything until you break trend. It started to mean something right here when we broke this uptrend line and broke to a lower low on a weekly right there. And then the MACD bear crossed. So now you went from having all the stars aligned to be long to all the stars aligned to at least be in cash. Now, unfortunately, I personally did not capitalize on a lot of the downside with puts and things like that, and many of you did. Well, many of the aggressive traders did. I chose to go to cash, and I had huge gains throughout the year, and I didn't feel like I needed to trade both sides, especially that late in the year. And it is what it is. It's some nice returns. So what do we do now? We just looked at two great trades. Well, the weekly's still in charge. The weekly's turning. We have to see where we're going to close. The close means everything. We're almost at that 50% fib, which is going to be resistance. To draw a downtrend line, we're a ways away from that, right? So it's hard to say, we're going to break a downtrend line. You could say, well, here's a downtrend line, which is, but you can't get long here, swing long, because we're not above the 10 SMA, which is our rules. So to get swing long, you're getting swing long up here if you're just looking at a higher time frame. Now, obviously, we're swing long from some great levels in the recent uptrend of the S&P. But I'm not all in, and this is why I'm not all in, because we're still below a 50 SMA on the weekly. And we haven't even closed one close above the 10 SMA to knock us out of this downtrend yet. Right? We closed right at it there. So the things that I do like, it looks like we're diverging from 2008 to me. I know it's early. I like the fact that we've grinded up, just continuously. So if you were overly bearish and you weren't open-minded, you missed the whole run. And I posted this before on Twitter. I feel like investors, average retail traders, and some institutions missed the boat. And when they miss the boat, they think, all right, well, we've come too fast. And I try not to get on Twitter and stock Twitter and stuff like that. But a lot of people are in disbelief that we could keep going higher. And when it happens, they get emotional and they start shorting. They short the whole way up. And they not only miss everything, but they fade the market not using rules of engagement, which is not how you trade. So getting back to where do we go from here? Well, a couple things I like. A, we're above the 10 SMA in the weekly. Great. That puts us in no trend. B, MACD's curling up. So the downside momentum is alleviated, right? So we're going to take it one day at a time. I'm not going to have predictions. we're going to have roadmaps. We call them roadmaps or analogs with historical chart pattern comparisons. We're going to use those. But we also have to respect, just like we respected 2600, it took us, 4 or 5 days to get over it. And now we have to respect this 50 SMA because we're now at the daily chart. Let me get rid of all the drawings. We have to respect this, all right? This is resistance until it isn't. Plus you have a gap here. So you might stall at between 2620 and 2650. So we had a brick wall at 2600, right? We got through this brick wall. Now we got another brick wall. So I'm just saying the easy money could be over in the short term. We just had we're in the 9th day of an uptrend, and we're getting to brick wall resistances, and I think it's going to become a little choppier. Now it hasn't, so I was wrong so far. First of all, I said it can't get easier than it did last week, and it has. And also, I thought things were volatility would pick up going into earnings, which it hasn't. So with those predictions, I've been spot on wrong. And that's why I always say, you never trade with a prediction or an opinion. You always trade with price. Price always pays you. And it always stops you out when you are wrong. And yes, we do have some losing trades. And let's just look at those for a moment with this video. Because, when we dissect charts with ES, and I trade S&P 500 futures and do it every day. And you don't have to trade Globex session. If you're up at night or if you trade outside the U.S., you might do that. But you don't need to. And I want to emphasize this again. You don't need to trade what I'm looking at right now, which is for day traders. We call it 5-minute ROE, rules of engagement. Our number one rule of engagement is price above the 10 SMA to get long with MACD heading in the right direction as price. Vice versa for shorts. So if you come in and wake up and you're at your job or whatever, maybe your job is trading, who knows, and you start to dissect things, you want to draw trend lines from, I like to go at least 10 bars. If you get long right here, you had some scale and you got stopped out. Draw another trend line that's about, 6 bars. I don't normally like to go less than 10 personally. I think the more you go, the better. This one pays. If you are dissecting even more, and you go right here, you get long, there's your stop. If you went from here, there's a lot of different ways you can dissect it. And there's no perfect way to, other than that wherever you get long, the stop is the lows of the day, vice versa. If you get short, the stop is the highs of the day. Do they all work? No. And I tried posting one, because I think there was 5 or 6. And, right here is one. If you would have dissected only 4 or 5 bars and said, all right, we broke it down trend line. We have our MACD with prices above the 10 SMA. I can get long right here. Yep, you can. You can. Remember, the more bars, the better. And you were not able to scale, and you got stopped out if you're using this. You didn't get stopped out if you're using that. So it all depends on what your risk profile is. I like to give it a little bit more wiggle room, but maybe some short-term traders say, hey, this was the pivotal low from that. Maybe I put my stop there. So to me, I classify as this didn't work, even though, rules of engagement say use the lows of the day. But anyway, you could dissect it this way. Uptrend line, or you can draw a tighter one, right? And you had all sorts of rules to be short up here, and that paid. And you can draw it again. So you say, oh, well, I got long here. This didn't work. Well, it did work because if you were super aggressive and had a tighter stop, you didn't get stopped. And if you used the lows of the day, you didn't get stopped. So it did work. You might have taken a little bit of heat, right? P&L might have went down for a tiny bit of time. And you had this short right here. And it's 26.19. You got 4, 5, 6, 7 handles. Maybe scaled 3/4. Maybe put your stop on. Now you got another trade. You break a downtrend line, or you can draw it with more bars. To me, this pattern right here that we're seeing is more of a wedge pattern. And if you go to the website, you'll see wedge patterns are my least favorite, because probably what's going to happen is it's going to stop out these people and come back here and start getting wider and more volatile. Now, we haven't seen volatility in a while. We haven't seen it really all year, besides I think it was the first trading day of the year. The bottom line is you don't have to trade these, okay? The focus, like I've always said since I launched the service back in 2013, is the ESFL engagement spreadsheet focused. That's our. It's on a spreadsheet every day, our new trades. We get 2 every day. We get 5 more in the weekend. That's plenty of trades. That's all you need to make a living trading and investing. Now, icing on top of the cake is our 5-minute rules of engagement. I can't post every single one that sets up on Twitter. It's impossible. But you have the arsenal. You have the knowledge. You have the education. It's on the website. So if you want to use that on top of the ESFL, by all means, go ahead. It works. All right? It's not going to work on every single trade. You know, the probabilities of working, in my estimated opinion, just like the rest of the ESFL. We've made money over 75% of the trades, which, once again, is unheard of in the industry. Okay, enough babbling about the past and about setups. Let's see what the current market conditions are. So currently, we're stalling at the 50 SMA, and there's got to be stops above, so most likely it's probably going to blow through, come back other, get a little bit more sloppier, and keep chugging along. Let's real fast look at, because I did want to look at these really fast, some historical chart pattern comparisons that are somewhat similar. I wrote down, well, I know there was one in 98. And bear with me because there's no real fast way to do this. Well, first of all, right here, once you got above that 50 SMA, you took off, right? 50 SMA resistance, we did a double bottom first. But going back, I think there was, let's see, 1992, I wrote down there was something similar. Just bear with me. I might have been looking at the Dow here. Actually, I think it was 94, 80, 71, and 53. So, see, this was more of a WV. It wasn't, I mean, we're looking at right now a witch at bottom, which is just a V bottom. This one chugged along. It took plenty of time. When we scroll through here, I didn't really see anything. Right back in here, 1990, you came up to this death cross, and it got really sloppy, came back down. This is a W, and that's a V, and you went back to new highs, and then you broke down further. Yeah, we're going to have to look at all these with an open mind to see what is going to be our roadmap going forward. 1980, right? 1980, death cross right here when we got up to the 50, traded sideways back and forth, got volatile, and then just took off. That's definitely a possibility. I don't want to rule out the bearish historical chart pattern comparisons, but to me, like I said before, I think we're diverging from those bearish ones, and I think the sentiment is too bearish. And when that happens, like I've posted many, many times, it usually goes the opposite way as most people think. All right, so we had a death cross here. That was 71, and once we got above it, we both flagged above the 50 SMA, kept going higher. That's a possibility. It's somewhat of a V bottom right here. And then we'll look at one more before we look at the rest of the market here. I think there's 53, and these are dots. They're really hard to see. 53, yeah. You got to blow up the MACD in the bottom here. So you had your death cross there. You came up to the 50 SMA. You ended up puking back to a new low. This was 53. So this one actually is a little bit more bearish. Took a lot more time to heal. So without spending too much time on some hypotheticals, let's just deal with our current state of the market. Our current state of the market, we're in a 9-day uptrend. We're at some resistance levels. We have gone straight up. It would be healthier if the market consolidates some. There's no indication of any consolidation yet. Look at the NASDAQ. Oops. NASDAQ composite goes right through the 50. And it's, if we pull up some fibs here, to this high. Come on. To this low. Yeah, we're not quite at the 50. There's still meat on the bone left on the NASDAQ. So let's see what we have in oil. Let's look at oil futures first. Then I'll start flying through stocks. I know we're already 20 minutes into this video. Okay, so we got a V bottom in oil futures coming right to the 50 SMA. And yeah, I think this thing could go to 55, but I don't think, to me, It's not a great new trade here. XLE, V bottom, right at resistance. To put on a new trade there is very difficult. IWM, right at the 50 SMA. You got to watch for some sort of a pullback before we would go higher, if we're going to go higher. IYT Transports, lagging a little bit. We looked at, excuse me, we looked at the Dow. Hasn't even hit the 50 SMA. IBB. This sector is interesting because we talked about this. When we got knocked out of trend, I think it was January 4th. This did not. And I said, watch this sector. It's not getting knocked out of trend. It's staying in an uptrend. January 4th right there when the S&P got knocked out of its uptrend, this stayed. And guess what? It led the whole way up, and that's what we talked about. Relative strength, when the market does that sloppy nature and gets goes right back into an uptrend, you look for the things that were the strongest. And we identified all those January 4th through January 7th. Gold continues higher. Looks bullish. TLTs, the bonds are doing exactly what we said. We said we could possibly come back down here to 117, 118. Could be setting up at some point the first quarter of this year. It just doesn't look like it's a setup right now. Apple lagging, coming into this gap. For me, it's a very difficult new trade until we get back above 160. Now above 160 or 12% off the lows of the year, it's still a difficult trade. If we go back and look at 2013, when did we start buying Apple? We waited. We waited for a double bottom or inverse head and shoulder. We haven't seen that yet. So it's lagged, and basically since January or December 31st, where did it close? 157, and it's at 155. It's down on the year. The S&P 500 is almost up 5%, Nasdaq's, and Apple's down. So you tell me. Amazon, phenomenal. And this is what happens. New lows came without MACD at new lows. We identified that. Bull flag right here above a downtrend line. We identified that. It was on our engagement spreadsheet focus list. Yahtzee. You get paid. And you got paid fat. Okay, Netflix. This one's, I think those options are close to 200% now. I posted the other day, I think it goes to 380. So to me, Netflix still looks bullish. And I'm going to keep an eye on that one. In fact, if it breaks to new highs, new multi-week highs tomorrow, I might actually put an option spread on going into next week. Booking. Booking and Expedia are really not showing too much relative strength there. I would not touch them. Tesla. Very sloppy. It looked like it wanted to break out back here. It didn't. It broke down, and then it's going grinding back to new highs. I actually would prefer to trade Tesla if it gets to new highs. I actually think it will be a great trade if it gets up there. Roku, someone was posting, it was a bull flag here, which was a possibility. I did not like this trade. It was not an ESFL. I waited to see. Since you're still below the 200, it's not the same trade as these bull flags up here. And we've talked about all uptrends are not created equal, and that's a case in point with Roku right there. What else do we have? We look at NVIDIA. Paid off the ESFL is going to hit the 50 SMA resistance, and that's going to be huge. Intel, Microsoft looks decent. Oracle. Oracle's one of the few stocks that we have not been paid on and engaged, I think, today, and it reversed. So if you are coming in and you're going to trade a 9-day uptrend and miss everything else that's set up and be upset about Oracle, then you're going to have to learn that you get long early in trends. And if you took Oracle and you were long 4 or 5 or 6 of their names that paid, this is nothing. It hasn't even done anything wrong yet besides not pay you on the day. So it still looks fine. It just has not paid yet. Adobe. Not doing too much. That one paid fat on the last ESFL, FFIV. CRM, Workday. I'm going to fly through some of these. Jobs looks okay. Team, I think, has, earnings? Or do they already have earnings? I think they have earnings coming up on the 19th, possibly. I would have been all over this stock. In fact, they were just getting too close to earnings, and I shied away from it. Facebook. Got paid fat on the ESFL. Yes, these new lows came without MACD. What do we call that? Bullish divergence. So after that happens, you bull flag above the 10 SMA, and you get a Yahtzee, and we did get paid fat on that one from the ESFL. Congrats if you took it. Google. Looks good. Has the 200 SMA resistance. You got to be careful adding to any of these. Baidu, this looks like it's got me in the bone to 160. If I have to pick one that still looks like it's got ripe for the picking, Baidu and Baba look good. Baba specifically more. Let's see here. What did we? Sina, YY. Let's look at this intraday here. So we scale at plus 1%. I think we got like 0.0, but it's so close to 1%. And I posted, we scaled it. It never did hit, I don't think, or maybe it hit here. Either way, you have to understand something. We have a proven methodology that's worked. It's worked since we launched the service. It's worked for me for longer. And that involves scaling. Now, if scaling doesn't meet your criteria and you don't want to scale, that's up to you. I use scaling. The methodology involves scaling. Is it a perfect science? Do you have to get exactly 1%? No. I've always said, in downtrends, we scale before 1% if we can. And I would say in uptrends, when we're below a death cross, specifically the 200-day moving average, maybe you could scale a little bit earlier. Also, in reference to options, when we go up 1%, a 70 delta option could go up between 7 to 10%, or 7 to 10%. But that's going to be based on your execution. If this option's 330 by 370 and you're paying a 10% premium to get long the option, you're going to be break even when we're scaling on the stock, which is fine, but you have to understand that. And if you're going to scale with options, use the more liquid options. If you're going to swing trade it and you don't care about scaling, you just want to hold long and maybe exercise the options and hold the stock, everybody's different. But understand scaling works. Scaling works to pay ourselves. Scaling works to reduce risk. And then when we have scaled 3/4, we raise our stop to our entry. And if it keeps going higher, like we saw with Tesla, we saw with Apple in 2013, you can add. Just to give you an example, if I had 100 calls in Apple, I scaled down to 50, scaled down to 25. 5 to 7 days later, it reset up and reconfirmed price strength. And I got 25 calls on still. I can double up that runner to 50. And that's what I would do. So that's when you add on price strength confirmation. I know I went off on a tangent there. I just want to emphasize the methodology, how it works with scaling and adding. And a lot of this stuff is on the website, but just wanted to briefly go over. Okay, so NTES. Let's change time frame. Sorry about the lengthy video. We just had a lot to cover today. NTES still looks bullish, still looks like a good swing long. Momo, 50 SMA. That looks like its goal right there. GoDaddy. Wix. Wix looks pretty good. It's just slow. Visa, MasterCard slowing down in financials. Just went on a mammoth tear. I mean, we were all over this. We nailed FAS. I think those options went up, I don't know. Let me see here. What is it? 90%. 153% on an ETF. 153%. If you got long here, you're up 153%. It's just it's a basket of financial stocks and an option on it. And you well over doubled your money. So, yeah, that looks good. Don't pick a top. It's at the 50 SMA. Might pause. I would not add to it. Listen, getting in reference to what I just said. So if you're long here and you scaled, you saw a pause day, another pause day, and then price strength confirmation, add any of these days. When you gap up to resistance level, this is not when you add. You don't add there, okay? If it wants to keep going, ride your runner versus your stop. But you don't add on a gap up at resistance levels. That's very, very, very important. Let's fly through those banks. JP Morgan, we got paid fair on that one. Goldman Sachs, woo! Absolutely huge. Morgan Stanley looks good. Citigroup, Bank of America, they all look great. They don't look great for new trades. Remember that. COP, let's fly through energy. I don't see anything that looks even remotely tempting here in this sector. I would just let it be. Cannabis stocks. Tilray engaged here. We got paid. I think we scaled 3/4. We got stopped at our entry. No harm, no foul. What's it doing right now? It's back to the 10 SMA. And the other one, Canopy, that one paid even more. We talked about this bull flag in one of the videos a week or two ago. And that one set up very nicely with rules of engagement on our break of a downtrend line, which is our number one trade. Docu held the 10 SMA. Just really not seeing a whole lot. Amgen, Gilead, Jazz, ALXN, if I could type. Yeah, REGN, aluminum. Come on, David. Aluminum, ISRG. ISRG looks interesting. There was two I wrote down also I want to start looking at. X-ray. This could end up being a nice swing long this year. I want to start looking at this one. 50 going up through the 200 after a bottoming process. You know, I know this video is real long already, but when we look at something, when we look for a bottoming process, right? This was Exxon in 2016. You had this washout, break of a downtrend, double bottom, WV, 50. When the 50 came through, this is called a golden cross, 50 to the 200 day. That's called your easy money right in here. So 81 to 94, $13. What is it, 18% on your money? That's the easy gravy train money. When you go to Apple, 2013, actually when we launched the service, very simple. Double bottom, 50 through the 200 golden cross, right? And you had your WV bottom, bull flag above, so you get long at 68, and you know where that one's gone. They went to 233, triple your money. And now we're back down here. Now we're going to wait patiently for Apple. So anyway, we looked at X-ray. What was the other one? Oh, ALGN. So we're going to look at these two possibly for some swing long opportunities this year. This one's nowhere near a golden cross, but it is, if it comes up here and does a double bottom or even a higher low, now we got our inverse head and shoulders and we could get swing long to 260 or 280. So that's one to keep an eye on. So sorry about the lengthy video. A couple things. Win. Got paid on that one. Las Vegas Sands, MGM, casinos look okay. So in summary, what is going on? Well, we talked about a zillion things. We have what we call, or what I call, a witch hat bottom. We've seen a couple witch hat bottoms before. I think we actually saw one in, what was it, 2016? 16, that was W. Yeah, both those were double bottoms here, but that didn't happen with the death cross. So I don't know. We launched the service in here. We saw a death cross here. That was a W bottom, a re-death cross. So this is really our first death cross. We looked at 4 historical chart pattern comparisons that could be still bullish, and we still know we have 2008. If we can't recapture this 50 SMA and we head back down, we still have that bearish 2008. So we don't have a great roadmap. The easy money to me is over. We've hit all our bogeys in the way up. Now we still have a ton of technology earnings coming up. To me, I'm going to sit. I'm going to sit with 40% allocation, stock market, long market allocation, and I'm going to wait. I got my stops in, and I probably won't put on more long risk exposure, with the exception of maybe Netflix tomorrow. I might day trade ES also, until we get past event risk. Once we're past event risk, if the market's reset up, I'll keep increasing my allocation. I just don't really want to get over 50% long until we get above the 200 SMA. You got me? That's all I got for you. The market video update. Have a great day.